welcome, ladies and gentlemen, to another episode of The Cautious Trader. I know I've been away for quite a few days now, but here we are. Let's have a look at the markets. But before I get into that, I want to let you know that throughout these past few days, I've been thinking about how Bitcoin has been moving upward, and of course, I've been in my video saying that there's pressure for it to come down. There's probably going to be a dip below the $40,000, but I have to be honest, that is again my bias, and I must acknowledge that when I'm speaking to you guys. And of course, when you're hearing these videos, you need to look at the information I am giving you and make your own educated guess as to what's going to happen in the markets or whatever. And of course, these videos are not for trading purposes. These are mostly for education purposes and for us to have a look at what's going on, what's happening, and if and when we learn something from them, then even better. So with that said, let's look at Bitcoin. Bitcoin made a move up and actually broke out of this resistance area that we had around the $58,000 region. It pushed even past 60,000 all the way to 60, I believe $61,000 before heading back lower, and now it's going into a consolidation pattern. It's probably going to play out for let's see how many more days. Let's get the ruler out. Yeah, whenever Bitcoin makes a new high, it usually likes to consolidate for, I would say, at least 2 weeks before making a new move. Last time it made a new high, it took about more than 2 weeks, actually almost 3 weeks for it to make a new high. So we have to be cautious of that. And if you're looking at the chart here, if Bitcoin does decide to come down, it's probably going to test these regions around $53,000-$54,000 level. There's lots of activity around here. The volume has been dropping ever since it made its new high. And we also have to notice that RSI was on the oversold territory around the 60,000 area. But RSI is tricky, and what you need to realize with RSI is that a lot of the times a high RSI or a very oversold condition just indicates that there is a lot of pressure towards the upside. So it's not necessary that as soon as we see a oversold situation, we're gonna get a dump, but the dump did come here, and we did see it go down by almost $10,000. So we need to acknowledge that. But for a major reversal in the market, then we need to see more evidence of just price remaining high while the RSI is heading back lower. And RSI, for those of you who don't know what it is the relative strength index. It essentially shows how much buying pressure there is in the market or how much selling pressure there is in the market. And the scale goes from 0 to 80. And whenever it's above 70, it's oversold. Whenever it's below, I believe, 20 or below 30, we call it, above 70 is overbought, below 30 is oversold. Okay, let's look at something else. Let's go to USDCAD, as we always look at. USDCAD has been performing very interestingly. The US dollar has been losing a lot of buying power as of recent, and we see that with this chart. Of course, oil prices have been going higher and higher as well, and it's no secret that Canadian dollar is has a relationship more or less with the oil prices. And if oil prices go up, then of course Canadian dollar is strengthened. And now we are testing new low territories, the 124 level. Let's go to the 1 week chart and see where we are. On the 1 week chart, if you actually look, last time we were in this territory, it was back in 2018. And before that, it was 2017, where the dollar actually went all the way to 1.205. So it wouldn't surprise me if we do want to go even lower to 1.22. And if we do, that will be very interesting. Of course, it just means that Canadians can buy into the market at a better price. And if the dollar becomes stronger, then even better. So not only you're getting returns on the market, you're also getting returns on converting your positions back into the Canadian dollar. As far as how it's looking, it is heading into the oversold territory. Again, same thing in 2017. That's where we were with last time we were at these levels. If it does want to go lower, 122.3 is where I expect it to bounce from. And if it does bounce, then it probably will go back to 126 to retest that area. It could even bounce here just to test that 126 area again and then make it move lower. But that's less likely, and I will explain why. If you remember, in one of my previous episodes, I told you that when we get a descending triangle pattern like this, so price is moving lower and lower and it keeps hitting a floor, oftentimes what we see is it will attempt to break the floor, and sometimes it will recover, but a lot of the times it breaks and it just falls. And this time it did recover, right? We went into a quasi head and shoulders pattern. I can draw it for you here. If you allow me for a second to find my head and shoulders pattern here. This is embarrassing. There we go. So there was this sort of quasi head and shoulders pattern, but head and shoulder patterns are usually not very reliable. I don't like using them, but here we see how it played out. It not only went into a head and shoulders, right? So if you had looked at this, you would have seen it probably on the 1 day chart. It's better to look at. Let's zoom in a little bit more. So it's not that much better. The 4-hour chart. The 4-hour chart gave us a better view of it. Regardless, we did break this floor of 126.1, and when it came up to retest it, it didn't even manage to retest it. And this is hugely important, because if you come up to retest the support that you just broke out of, or broke below it, and you can't come back to retest it, that just shows that how much selling pressure is on that whatever asset or forex that is being traded. So it came back up to try and retest it. It couldn't even manage to get above 125.7, and then rolled over, and it's dipping further below. I think there will be a bit of a quote-unquote dead cat bounce here, maybe going to 124.5. before heading back lower to test that 122. Or if it does remain in the oversold territory for a little longer with declining volume, then we could see it reverse totally. Let's look at gold. With gold, as predicted, I showed you last time how it's going to bounce from this level. It did bounce, it came back to test it, but didn't quite reach it, and it's heading back higher now. It's probably going to test this 1764 level, and the 1764 level is important because that's our moving average. If it does test it and breaks above it and closes above it, then we could see it head back higher for 1821. Otherwise, this could just be a bit of a Fibonacci retracement. Let me just draw this Fibonacci for you. As you can see, it's right on that 0.382 level. Maybe it comes to 0.5 level. I don't see it coming all the way there, but you see how beautifully it came to retrace back to 0.38 level. This is the Fibonacci 0.38 level, and it's going to probably head back lower. Okay, Euro USD, let's have a look. Same thing, weakening dollar, and we had a level here from our previous video. It's bounced up from this, could go back to test 120s. If dollar keeps going lower, then I don't see it heading much further higher than 120s, and just probably going back to test our 118 level. And let's just look at S&P 500. S&P 500 heading for 400. For sure it's gonna hit it. It's a psychological resistance though, so I don't see it breaking much higher than that. Maybe we would see 420, but that's probably in a month or two. Anyways, with that said, that has been it. If you have any questions, leave it in the comment section below. Don't forget to like, share, and subscribe, and I will catch you in the next episode. Bye for now.